right, guys, welcome back to Yona Yield. Nice to have you here. I finally managed to connect TradingView and YouTube. This is a big improvement, and I'm very happy about that. Finally, it's possible to just, straight record in TradingView and post it in YouTube. I did a test run before, works fine. Before that, I have been struggling with OBS, had it on my old computer, which was not the best in performance. And now with the new computer, OBS would work, but this is much nicer. So glad they brought this feature here, and it's working nicely. All right, so guys, we have a very important video today, so I will post this on TradingView and YouTube, of course. Maybe you have seen I was not so active in YouTube lately, but trying to change that. I have been more active in TradingView actually lately. So let's get to it. And the question is, of course, what is going on with the markets? And I'm specifically talking about indices in this video. Normally I'm trading more Euro USD, but indices are very important right now, and for me at a very crucial point in time. So first, we want to look at this article, as you can see already by the headline of this video. Okay, Micheal Burry, the guy from The Big Short, I don't need to introduce him. Basically, he is betting again against the stock market. We have been reading this over a couple of months already, and he is doubling down. And the question is if he is correct or not. So this is an article, you can read through it by yourself. Besides the article, my personal thoughts on the stock markets are that we are in a correction since 2022. You can see the downturn here, and the writing was on the wall already in 2021 when the Federal Reserve started to increase the interest rates. But then there was this whole tantrum from Jerome Powell about, okay, inflation is just temporary. Of course, the insiders around the Fed just liquidated their positions in that time, right? And so, as you can see now, 2022, we had the first down move. And as you know, corrections are always coming in three waves normally. So let's draw this up quickly. Need to find the tool, of course. One moment. So it should be here. So I'm thinking of something like that. Of course, we can still get another move up to fish out this top here. However, I'm assuming that we are rather going into a C wave soon, rather than later. And the C wave is normally the most violent one, and this will be when the real stock market crash will happen. Normally in the A wave, it's still very relaxed, and there's still a very big push up to squeeze out all the shorts, and then in the C wave there is the real crash normally coming. So the question is, are we pretty much there yet? And I think so, yes. All right, so let's investigate a little bit further. We want to look at some fundamentals. We have here the PMIs, manufacturing data, and we can see that actually in 2023 we have been pretty weak. As you maybe know about the PMIs, the economy is expanding once we're over 50. So that will be this line here. I hope you can see it. It's a little bit small, but as you can see, the whole year of 2023 we have been pretty much below 50. There was only one good reading in April, but as you can see now, it's under 50, and therefore the economy is rather contracting. Keep in mind, when you have a couple of times bad PMIs, normally this affects GDP, and once GDP is bad, then we are in a danger of going into an official recession, etc. So here we have been the whole year below already. So PMIs speak a very clear language that we are in a recession, and the stock market should not be where it is right now, making again very high levels, basically right at the high point of 21. However, as you know, fundamentals, there's a big problem with that. That's why I don't like fundamental data, because it doesn't tell you anything about the timing. It just tells you how it should be. But the market is a lot of times irrational, and the market is basically just following the money printer of the Fed, right? So if there's any hope of money printing, it will go up. And even if there is no hope, as we can recently see, there is not really any um, reason for this to go up. But then the investors just try to make some interpretations about the Fed, like, oh, okay, well, they will make a rate pause, even though they never said they officially will do that, but they will do it. So we just buy it up, right? And that here, this counter move that started in 20 yeah in the beginning of the year, we just basically in the beginning of the year went up to test the high points of the last year. We will look in the yearly chart pretty soon. By the way, guys, we're looking here at Nasdaq the whole time if you have not noticed. um, Basically this whole up move was driven by the fantasy of, okay, rate pause are coming, and maybe finally the investors will wake up now, that this is not really the case, right? So let's have a look now at more technical data. We have looked at the fundamentals. We have looked at the article with Micheal Burry also. Let's look at technical stuff. We want to go for this on the yearly chart. So we'll take a big chart here, and note we don't have a lot of here data into the past in TradingView. Unfortunately, maybe there's another provider I can look where there's more data, but it's irrelevant. I don't need to see that right now because I'm only focusing here on the price action, and we're still looking at Nasdaq, guys, because I think this is the most overvalued index at the moment, because tech is just overvalued. It has been running up a long time. So what we can see here is a pretty clear engulfing to the downside. And let me get the drawing tool whenever I can find it. Okay, so basically this candle from 2022, which did a clear cut engulfing right here. What normally happens after that is a pull back up. That happened as well. And even it extended a lot up to the high point again. So after the pullback, normally we then start to go down. Let me get this drawing tool from here if I can get it out. It's hiding here. Yeah, unfortunately, guys, I cannot get this out because I'm recording right now. All right, nevertheless, I have also the drawing tools right here. One moment, guys. Where is it? Here, okay. So normally we get a pullback up and then we get this down move, and you can see we have a lot of room actually. In the Nasdaq there would be room until like the 8K level, where then there would be some support here. So this is the last support down here. So there's a lot of room here. So giving the yearly, it's a pretty clear signal that we just made a pullback into the high of the last year, and now we will go down. So looking now in the smaller time frames, so we go on quarter. So this, each candle is 1 quarter. Also here we're in a crucial point in time. This is why I wanted to make the video right now. We can clearly see we have 6 days left in this quarter, and then a new quarter is starting. Here I can also see there's a clear color change. So I'm assuming in October a little up move again, but then the big correction could finally start. So we are at a point in time that is very interesting, where a big washout to the downside could come. And I don't say this lightly because I have also looked at different constituents in the Nasdaq and in the US 30 and in the S&P 500. So also there are constituents which look like due for a correction. For example, Nvidia is just one name we can mention, but there's other things as well. So also here it would make a lot of sense for a bigger correction to come and starting with October, starting with the last quarter of the year. So I'm assuming the correction could start within this year and then unfold throughout next year as well. So here definitely a signal you guys should watch out. Of course, it's still 6 days to go, so there could still some stuff happen. Like if this candle, this quarterly candle would close green, then of course, again, the signal would be off the table and would not be valid. Then I would wait. But if it closed red, and given the PMIs, how they are at the moment, high chance of a bigger corrective move in form of a big ABC move right here. So this kind of move, right? All right, so that much from the Nasdaq. We can also look quickly last thing in the monthly if we want. Here we can see there was a very nice hanging man candle in the month of August. So also this one gave already a signal, so there could have been already a short opportunity. Also, you can see we have here the Bollinger Bands. This is the second and third standard deviation. Also here we are in the upper parts, and it would totally make sense to have a move here to the downside like this. So we will see what happens. There's of course a rest chance that this move, let me get these drawing tools again. This one is always hard to find, guys. I have it actually in my list down, but I cannot access this right now. um, Let me have a look. Okay, it's this one. So basically there is still a chance that, instead of going straight down like this, it could also do something like that, go into the second and third standard deviation again, and then come down. So typical stop hunting, because this has not happened yet, right? We didn't see any hunting of the stops behind this high. So this could still also be in place. If that would happen, then of course the whole crash scenario would be postponed into the future. Depends probably on what the Fed will also do. In that case, maybe the crash will still wait until 24, 25. However, there is a rest chance that I see that this could happen. So either it's going to be this straight down move, or it's going to do the typical stop hunting washout move, go over 17K again, and then the crash. All right, so very interesting here in the Nasdaq. Then we want to look at US 30 and also German index, and then we want to wrap it up, guys. So here in the US 30, it looks similar. Let's go again to the yearly chart. Here we also have a color change from green to red after having three very nice years. And normally there's a rhythm of 2, 3 years and then some kind of correction. So here we have very nice impulsive years. Also here, this is a red candle, so might turn around here in the yearly, though it doesn't look as clear cut as in the Nasdaq. All right, so then let's look here in the quarterly. Also here, 6 days to go. At the moment it's red. Should it stay like that, then I would say high probability for the crash or correction to come down here. If it closes green, then it should go up again for a couple of months as well, because also here we don't have yet the wash out of this level, the high point, right? Okay, but very interesting here in this point in time. Now let's look at the German index. This one looks very beautiful to me because we have here a clear engulfing at the moment. Still 6 days to go until this candle closes. If it closes like that, then we would have a clear engulfing on the quarterly chart, signaling us again that it could come down here again even lower if it wants to, to maybe going in that level where the corona crash went. So very interesting here. We need to see how it plays out. 6 more days to go until we have a final answer here. But also the German index looks very interesting. Here is now the yearly. We can see green to red, and then here the typical stop hunt actually happened here, as we can see it. We got some rejections here, and then the stop hunt, which has been taking place this year, and so now it would actually be ready to crash down, okay, due to this stop hunting over the certain levels. And now we can also see in the monthly, looks pretty nice. We did have a engulfing down in the month of August, and that closed then in the beginning of September. And here it looks to me as we are washing out the stops behind that level, and that it could be ready now for this kind of down move. So also here potentially a big nice move in place and looks interesting. Lastly, guys, we want to look at Nvidia. With the recent revelations around this stock, there's a lot of rumors at the moment about their business model and their kind of um, reporting on their financials and stuff. So here, for me, also very clear cut signal. We can see it. We went into the second and third standard deviation of the monthly chart. So we have a clear engulfing down. 6 more days to go. Let's see how it will close. If this closes like that, for me, a clear signal, then potentially still an up move right here into this gap, and then we could go down. So here looks very nice. Also on the 3 months, you can see it's a clear turnaround signal right now. I need to see how it closes. 6 days to go. Like I said, it's not final yet. We need to wait until the end of next week to have our final decision. But at the moment, it looks pretty bad. So then, what about the yearly chart? Let's have a look here. There, still looking strong actually, but also here there could be then a down move because the year before was red. Okay, so it could still come down fast actually. Depends, of course, what is the news around Nvidia, but at the moment it doesn't look too good news wise. And yeah, 3 months and monthly charts are pretty not nice at the moment, I would say. Okay, guys, that's everything for the moment. I want to keep it short, and I catch you in the next video. I will try to make more videos for you guys, and yeah, makes a lot of fun with TradingView. It's in my opinion much easier than with OBS, so nice stuff. Okay, I catch you guys in the next one. Trade safe and stay tuned.